So that's true, Jay. Okay, great. So you got a report on Sunday night, my night. For some, it was already morning or evening. Um, there are a few things that are changed, and we need to go over it. Okay, but generally speaking, our main direction trades are still on. If it's the euro pound that did a very nice move during this night, if it's the euro kiwi that holds this double false breakout we've had and the convergence we got right here, right? This is the convergence. So it holds that and respects that, and after the range of the non-tradable market conditions, we got a beautiful move down as we wanted to see. Yep, that's true, Jay. That's true. It's following our plan. It's making very nice movement payment where it's like a move of over the 100 points here, so it's really nice, of course. And a few other pairs that should provide us some good opportunities to trade, like the New Zealand and Canadian, which is correcting itself a bit, and we are after shorts there for a longer run. If it's well, let's start officially. Okay, so let's go over that. The list. Where is my list? Here we go. So the first one we have in the report, this report, of course, that's the euro pairs, right? So let's go over that. We have the euro dollar. No changes in our view here. Triple cycle down, double cycle up. 1, 2, 3. 1, 2. Which, by the way, could go and make the two a bit bigger or can hold this range. We know that we have two waves for corrections, right? Only two waves or a range. Both are acceptable here. That could be a double wave that holds and continue lower, or that could simply go and create a range for us. So falls back on the bottom, falls back on the top, and we are stuck in the range. So for us, as long as our plan here do not change, does not change, as long as we are below these highs, we are only and only after sells. Basically, it's too easy, right? Our direction is only one. Only if we break for any reason, fundamental, whatever, only if we break above that, we can expect the pair cross even above 122 or 123 and take us to the monster levels we have from the monthly cycles. And that will be right here. That's actually even higher. Oh, yep, that's doable. Yep, that's possible. But for us, technically, we got the levels. We got two false breaks. We got a triple cycle. One false break was horizontal. One false break was trend line false break. We got triple down, double up, or a range. So for us, we are still expecting a push lower. How low we can go, you know, guys, according to the daily cycles, right? It's not changing. It's all the same. And by the way, I want to show you how we create a magnet zone. So let's assume currently this is our high of the correction, right? And this is our cycle. So we have the huge cycle, we have the short cycle, right, which is here, of course, the last push on the 4-hour chart. And we also have the double cycle we had before, which is, oops, sorry, wrong measurement. Okay. And now if we drop to the 4-hour chart, we get this expansion, the little lines, coming together with few magnet levels. And that's our magnet levels. Okay, magnet levels, that's when a few different cycles provide the same zone. That's magnet levels, right? And it could be 118 area, and the next one would be 117 area. Well, we've been talking about it on the weekly videos. We've been covering that also on the previous meetings, but we never spoke about the creation, right? So we create a magnet zone basically by doing meeting points of several cycles, several different cycles. Now, one more thing to mention here, guys, because this is a mistake that we can do at the beginning. How to measure a cycle? I mean, many times I get a question of Vlad, why do you measure from here to here, but not from here to here, for example, right? So my answer for that is always simple. We need to include high, low, and correction in order to get the full cycle expansion levels. Another thing is that every leg we measure of a cycle, so let's say this in that case, right? Every leg of a cycle that we measure or try to build is basically a cycle by itself, right? So it could maybe not be seen on the 4-hour chart, but on lower time frames, it has to be a cycle by itself. And that could be also double, triple, or special, right? In our case, a triple. Now, it also has to stop with divergence, of course, because cycle without divergence is like a car without fuel. It just don't go. So that's what very important to remember. When you measure, every leg of your measurement must be a cycle by itself with all the rules. So it has to be a double or triple or special cycle. It has to be with divergence, ending with divergence. And then we know that our measurement and the levels we get are correct. So far so good. So it's a very important thing. I just wanted to remind and mention and make it clear. Okay. I did send the email, Nick, about the live room schedule. I did send the email, but it's also in the calendar. It's also inside the calendar. You can always see that inside the calendar. I book that normally during Sunday, so we are ready for the week to come. Okay, but normally our hours don't change. We're the hours are pretty much same. Okay, this is what I'm talking about here. This live room schedule, okay, that's where we get it from, and I update it on Sunday, as I said. Okay, cool. All right, guys. So let's continue. So we are good with the euro dollar and the cycle measurements explanation. Euro pound, also no change for us. Our view remained the same. We are bearish. There is nothing that could or should change our current expectations. The only thing that is forming is currently this little divergence. But again, I said the only thing is forming because, one, it's not yet formed. It's just a potential divergence. So maybe it will be, maybe it will not, because if it keeps dropping, there will be no divergence. It will be just lower lows. So we don't deal with predictions, right? That's the only thing that could make some kind of temporary stop maybe on the days to come. But as for now, for us, we have our clear levels. We are aiming the 0.91, which is this cycle level. And let's do the same trick we did with the euro dollar, guys. We do this measurement, do the correction, and voila. What do you know? The 38.2 of the big cycle correction is exactly the same zone of the 100% duplication. So this is a pretty serious magnet zone, right? The next serious magnet zone we can find here is this. Okay, that will be around 0.90, and then we have it a bit lower, but it will be for not for magnet because it will be for daily cycle based. All the double cycle correction 38.2, and that comes to here approximately 0.89, a bit higher. Okay, so that's for the euro pound. Again, no changes for us. We don't have any invalidation. We don't have any false breaks or divergences or convergences or whatever to the bullish side. Our plan wasn't remain bearish, and so far moving pretty nice. We got this breakout on last week, which is moving. We got this one double cycle up this this week already. Okay, so both are already paying 1 to 2 each of them. So that's always the power of the double wave correction and continuation, always, as long as you don't have signs against you. And signs against you means bullish divergence, bullish convergence. As long as we don't have them, we are good to go, right? It starts to get a bit clearer with every time we do that, right? All right, guys, let's continue. EuroCAD, we are still in both directions. Currently, the bearish direction rules and rocks. And the reason we are good with both is for that, because we could have here the full duplication of this cycle. We got it triple down, double up. We can easily get it going to 61.8 and the 100. And on the same time, exactly on the same time, we are still on this big weekly range, and we still can get this push as well. Therefore, in such conditions, because we don't have both highest time frames matching, each of them show different thing for us. As long as that's the case, we can trade both directions. Yep, currently the bearish direction is the most powerful one, so we go with it. But generally speaking, our direction for such cases is the both direction, so we can trade both setups. Okay. Any questions as for now about any of these guys? We also have the same with the euro versus the Aussie. Both directions are tradable for the same reason. This is our range from weekly. I can easily expect that for one more high. And on the same time, we have all the reasons to get deeper correction. So something like that is more than doable, right? Is more than doable. And also, there is not bad chance at all that this is just a little range for us inside a big range, which means we can also bounce from the bottom of it, right? Definitely. So that in that cases, again, that's two situations we have with the market always. One, we have correlation between weekly and daily, and then we trade it. And two, we don't have correlation. And both directions are tradable. And if the cycles don't match, that's where short term comes versus long term. On short term, we can expect these pushes lower. On long term, we can expect the continuation higher. And that's both fine. Okay? So in that case, every system is tradable with the trend or with the reversals. Each system in such conditions fits and matches, as long as, of course, we have the rules respected. As for short term, we also might get, we are already actually on 61.8. We might get a full duplication. This is also a triple cycle, right? 1, 2, 3. So on short term, we can expect even retraces, right? You see that, guys? How from long cycle we go to lower cycle, and as long as each cycle is clear and readable, That means the big money is here, the big money is playing, and we want to trade it. Okay. And the Euro Kiwi we have on the list, we are only bearish on this one. Okay, only for sales for us. Our targets would be accordingly. We had this nice cycle before, so we are aiming between 38 to 50 first of all. That's our first zone. And the second zone for us would be here, the 38.2 of this double cycle, that's 162. And dreamingly speaking, if all this huge fat cycle would be corrected, we are going to here. By the way, this was a triple cycle on the daily, right? So if we do it like this, what do we get? That the 50% retrace of the daily cycle and 38.2% retrace of the biggest cycle, which comes from the weekly, are creating for us what? How do we call that, guys? A magnet area. So if the bears hold their control, we can be exposed to some good bearish control and good bearish trend here. So that's all about the euro pairs. Oh no, sorry, we have also the euro yen, which is another pair. We trade both, and the reason we trade these both is because we are in a range on a daily cycle and we are bouncing from the top of the range of the daily cycle, right at the end of these beautiful two waves. But on the same time, according to weekly cycle levels, right, there is a chance we are going to 161.8, and this is why our both directions are tradable. We don't have a complete match between weekly and daily yet, therefore we are both good to go. Cool, that's with the euro pairs. Now let's continue to the dollar pairs we have. We have the dollar franc, which we also trade both. Why? Because one thing is we are on the range here, right? Classical ranging pattern on a daily chart. In simple words, if this one is broken and taking us to the next level, we are going to here, that's 0.92 area approximately, where we will get this divergence completed. That will be also a triple cycle. So 1, 2, 3. That's definitely doable, more than possible. Technically correct. And on the short term, we already had a double cycle. We are already bouncing with false break from each level. False break, the two false break in a row, enough to create a range for us. But then we also had another false break on the top. So this is a range pattern for us. And technically speaking, as long as we are above this bottom, buys are also acceptable, right? And that's another example for cycles, conditions where both directions are tradable. No changes in our view as for now. Okay, everything remains basically the same. Okay, sure, Nick, sure. That's on the next list. Okay, so I'll do that quickly for you. Aussie Kiwi. We want long for the long term because we expect the 113. Currently, short-term retraces more than acceptable. Why? Because we have these conditions here, kind of triple cycle, but not from this high. Sorry, from here. Okay, so like this, triple cycle. So yeah, we can expect the correction zones where from we would probably go for longs for the longer term. For sales reasons, we got the triple cycle. Now, this is a 4-hour chart cycle up, so we got the triple cycle down here. It was special, sorry. 1, big 2, and this, and we got this double cycle, right? So with the breakout of that triple double, but that's intraday correction. We got triple double, and this is where your short-term expectations could remain bearish, but for long term, we're still aiming the top of this range, which should be around 113. So every pullback down, and we want to go up. That's all. So Nick, take care. And that was Oze Kiwi for your request. Let's continue, guys. The next thing on the list on ours is the dollar yen, and this one is behaving, well, weird. But that makes sense. We have all the sensitivity. Guys, can you hear me? Someone's saying there is no voice, so let me just answer. All right, thanks, guys. Dollar yen, we expect up as long as this low holds, basically, right? Now, why the current conditions down are acceptable? For one reason, the sensitivity in North Korea and the US puts its pressure. And when there is geopolitical pressure, normally the immediate pairs that gain strength are the yens, are the Swiss, and for commodities talking, of course, that's gold and silver, maybe. Commodities. Why? Because when geopolitical conditions are not in their good, and they are not good, right? Not good at all, investors run away to what they call safe haven. Is that really safe haven or not? Well, we can have endless discussion about that, but basically that's what it is. And for us, for technical reasons, while we are above this low, bullish setups are acceptable. If we break below this low, we remain to both directions. Why? Because currently we are on the bottom of this range. We have the divergence, we have everything. We had the false break, we had the convergence on the 4-hour chart. That's why the bullish setup is on. But if we break below this low, we are back to both directions. Why both? Because it still could be a false break and just continuation up. And on the second time exactly, by breaking the low, we might get going at the beginning of some serious journey to duplication cycle of this, and that will be around 105, maybe even 100, and of this. And this is where we get our magnet zones. Okay, that will be the first one. Okay, the next next one could be all the way down to here, and who knows, maybe even much lower, but that's too far as for now. So as for now, for us, we are only after buys, but if we do break here, this would be our invalidation for buys, and that would be for us only returning for both, because on such conditions it's the way of Mr. Market to tell us, you know what, cycle's not holding, bulls are not too powerful as for now yet. That's why we neither go all the way down to the next levels and we can enjoy the sells, or this is just another false break before the rise continues. Does that make sense, guys? Okay, but as for now, for us, we are in 2 waves correction, which means we can start looking for the buy setups. Okay, For triple B, it will not work for buys now, for example, for the triple B strategy, because we are below the daily range, right? And the 4-hour chart were not below. But for SRS, it can work for buys if we get our good trend lines to be broken. Currently, we have none. So as for now, we want to go buys, but we are in waiting zone, as there is no reason to go for buy, right? At this stage. Cool. So dollar again, we have the explanation, we have the invalidation. Let's continue, guys. The other yen pair, Swiss yen, same story. As long as we are above this low, we expect continuation up. We want to remain bullish. If we break below the previous low, that means in a very simple word that we are going for the next levels, which would be around 111 or 109, which both would be acceptable with these double cycles. That would be the 38.2 correction, right? That would be next to the 50% correction. And we will want to aim there if we break below this low. Currently, according to the market conditions, we got triple, boom, and we get double, which is forming, creating. There is a good chance we are for rallies from this area. So for us, Swiss yen remains bullish. And validation here. Next one on the list would be pound pairs. Pound franc, no changes for us. We wanted to go up. We got this up happening. It was triple, double, false break rally. And we are in 100% movement to the upside. Very nice bounce. To make long story short, while we are above the support and the low of this cycle, we are only after buys. No changes here, guys, so I'm just updating, okay? Nothing changing. Pound Kiwi, this one. Take a look what it's doing right now for us, guys. Retesting the broken range, right? And we have this trend line from the bottoms. So this is our possible action zone for the buys, if the buys are serious. If we break below there without any good setup, we simply let it go and we are back immediately to neutral, because it simply would be not clear. But as for now, technically, we have a very good setup. We broke the range, we're respecting it, we have the trend line, we have this little zone to watch for the setups. And if we drop lower, let's say the 4-hour chart. No, on 4-hour we don't have nothing clear. We have it on the 1-hour chart. We can start building up some kind of cycles positions here. Let's see where we have a cycle to measure here. 1, 2, 3, triple and correction. That would be our levels, and this is our zones. That would be the first one to follow, that would be the next one to follow, and that would be the final one to follow. We do not have bullish divergence here, which is very important to mention. No bullish divergence yet. So step by step, patience. We needed to slow down. We needed to create for us the setups, and we will be looking for the buys. As long as it does not provide us what we want to see, we keep it in the watch list and not tradable list. Does that make sense, guys? Yeah, it's very, very, very important. You see, we just go step by step, rule by rule. We have the cycle? Yes. We have the levels? Yes. We have the reason? No. Therefore, no trade. Okay? Remember that. So this was the next update for us, still correct and relevant, of course. Next one, you're welcome, Jay, you're welcome. Pound, where is it? Pound yen. As long as the last low holds, we are bullish. Now, you remember from previous week, guys, from previous week, what we have been talking about, that we are going up. And this push up that we got on the last 2 days of previous week provided us the amazing triple cycle movement. So that means we can expect or double wave correction or kind of a range movement before a possible continuation up. For us, we are only after buy setups as long as this low holds. We want only buys. Now I want to stop for a second, guys, and just to remind you again, why these conditions, how do we choose when we only buy or only sell or both? How do we choose? If we have correlation from weekly charts to daily charts or not. If we do have, that's classical, we have only one direction to trade. If we don't have, we can trade both, because each cycles are tradable for shorter and for longer term. For weekly, we had this, so we can expect the 38.2 or 50% zone, right? That would be our levels. And on daily, we have a range, right? And we were bouncing from the bottom of the range and the triple cycle. 1, 2, 3. That's basically all. Both directions combined together for us, and this is why our direction is only one at this stage. Make sense? Clearer? And that's all. We got our false breaks, we got the convergence we wanted, we got the pullback, we got the rally, we got everything as wanted on the entire week yesterday. Previous week, sorry. Now it's time to see if the longer cycles are with us, and that's why we have this low for invalidation. As long as we are not there, we are looking only for buys, possible setups. That's all. Just wanted to remind you guys how we choose. Are we only in one direction or are we in both directions? And they both are tradable. Next of the pound is pound dollar. And here we are bullish for the long term and only with the break of this trend line. Remember this explanation, guys? 1, 2, 3. Descending triple cycle. 1 is bigger than 2, which is bigger than 3. So we have descending cycle. Okay? From biggest leg to middle leg to smaller leg. Rare pattern, but happens. We are in a double cycle correction as for now. We don't have this trend line broken, so there are no reasons for bears yet, right? Even though break below that would, of course, make it valid. And for us, currently, the long-term direction remains bullish, right? For long-term direction. Why? Let me just explain why. Remember the corrective cycle we are in for now? We did not even get closer to the 38.2. We might. And on daily chart, we got a triple cycle up and we got a correction down with a bullish hidden divergence. So far, so good. So again, weekly comes with the daily. And that's why we are for long term for buys. For short term, we are accepting the sells with the break below the trend line for the reason of this. It could make us the double cycle movement to 61.8, 100. To make a mirror for us, I just want to remind you what mirror is. That was the previous cycle. So technically only, it can get as ugly as that. And this is the only reason why we still, with the break of the trend line, of course, and getting the lower lows, we would accept it. As long as we don't have it and we don't have lower lows, we remain bullish. Okay? Pretty simple. The read here is pretty simple. And as I always say, if we have a clear read, we have the big money with us. That's what it means. Clear read of cycles, clear sign that the big guys are playing. And if the big guys are playing, we want to be there. There is a great saying from the movies: if you cannot beat them, join them. There is no chance we can beat them. So we're not even going to try, right? We want to trade with what they are showing us. Next one, guys, pound Canadian. Where is our beauty? Pound Canadian. After breaking the previous low here and not respecting for us the 4-hour chart movement we've had, this pair in both direction. Okay, so basically simple. We are here on both directions. Now we can expect that taking this low, and we can expect it to make another movement to the upside according to this triple cycle. We have the divergence, we have the levels, another false break and bullish movement is acceptable. So pound CAD, now the way it's forming and the way it's holding, we are in both directions setups. Okay, once again, why? Because from weekly range, we have the level lower, and it could complete for us easy bend to bend movement. And we will, in that case, do what? From the bottoms, we would look for the buys, right? Short term, we got triple up, we got this ugly move down, and both ways could still be tradable. So rally on short term is still possible. Sell on the long term is more than possible. Both directions are on. Next one, Pacifics, New Zealandian yen. Same story. Both directions are tradable for one reason. We have the range. We can go and trade to the bottom of the range, or at least to the previous lows. On the same time, on daily chart, we have this 61.8 cycle. It's actually 4-hour chart cycle. We got this triple cycle down, double cycle up correction, and we got the continuation, which is bouncing from 61.8. If we measure this cycle coming together, we would get the same idea. So both directions are tradable for us. Short-term bounces and rallies, longer-term sells to the bottom of the ranges. Both ways are correct, technically, cyclically speaking. Short-term rallies, long-term sells. Again, pretty simple read. New Zealand and Canadian is bearish for us, and we want the sell rallies only. We don't have any reasons for buys. We don't have any stop. We have this trend unbroken, so we technically might even get it retested. But for us, every rally followed by bearish divergence would be a sell call. So the deeper we go up, the better for us, the better the sell would be. For this pair, we want to go down and possibly to the bottom of the range. So it's pretty heavy levels to go still. A lot of pips to be taken on the drop down. For us, we remain bearish here. Also, because on the daily cycle, we don't have any invalidation, right? Because we do have a double cycle on daily with a bullish divergence, but there is no invalidation. There is no false break on the 4-hour chart. There are no false breaks on the 1-hour chart. There is not even triple cycle up, double cycle down yet. Correct? There is no invalidation on daily cycle at all. So we have only one direction. Sell rallies. And the Australian pairs, Aussie dollar broke our invalidation level here, which means we are in both directions now. Why both? Because that still could act easily like the end of this cycle here. And on the same time, well, I mean here, right? False break, so that could be a range as well. And at the same time, we have a 160.8 above 0.82. Since the invalidation was triggered, we are with both directions, with main direction to be bullish, because we don't have any false break or lower lows as for now, right? So our direction currently, preferred direction, is bullish. And if we get the lower lows and trend and breakouts again, we are back to bearish. Both directions are tradable, but currently you can see clearly by yourself. The pair is going up. So do we, right? After the invalidation got us triggered. By the way, technically, it was perfect. Let me show you why. Because we got the special, we got the double. We got the breaker. See that? Technically speaking, that was a perfect scenario for bearish call. But this false breaks and don't hold, that's where we must apply invalidation. That's a very common mistake to say, oh no, it's now only for sales, and that's all. We must keep in such levels invalidations. Why? Because sometimes even the most perfect setups just don't go. And in that cases, we must have invalidation because we might get it much higher. Why would we force the sells? Make sense, guys? I want you to think about it for a moment and admit with yourself, how many times you told yourself, we are going now only down. It was running so much, it's only bearish. I'm gonna keep it. Remove the stop loss and you just let it go. And after 100 pips or 200 pips, you send email or get panicked. I got stuck in a position that happened some time ago. What do I do now? And this is why I show you all these situations, guys, where invalidation comes in play. It's very important. Very. Now you understand how much. Okay, so yep, 0.82 is in play, maybe even slightly higher for this pair, as long as we don't have the trendline breakout and lower lows again. And this would be our trendline breakout, the updated trendline breakout. And the lower lows, it's here. As long as we are not there, the direction is up. Okay. Moving on, the next one, OZ Kiwi. No, OZ Kiwi we actually spoke about, right? We won't go by deeper there. All right, so that's for the forex market. Dollar CAD, I don't have clear read here yet, so it's not on my list. Even though I believe there is a good chance we are going to 121 or 120, still not in my list. I prefer skip it. There are better things to trade. Anything on your list, guys, that you want to ask and discuss about? CAD franc, also for me currently not tradable. Looks like a range. I still need something a bit clearer there to make decisions. Oh, OZ CAD we didn't speak about. Sorry. OZ CAD, guys. OZ CAD. We have this trend line. We have this trend line, right? And we are very close to there. We got 0.9840 in the bottoms, very close to the 0.98 zone. So we can say that's enough. That's enough. We had our sell reasons previous week. We got double cycle down. So far, so good. Thanks to the pair for doing that. As for now, we are back to neutral. Okay. New Zealand and Czech. Wow. I'm not going to cover that here because not everyone has it, so we can do it Oh, New Zealand and CAD. That's okay. You bought it. Well, I prefer for long-term sales. RSI indeed was below 20 MA, but that's not a reason for blind trade. You got good run here. It could not work the previous time. Take a look. We don't even have divergence on the 4-hour chart. Pretty tricky. The bounce is good with you. It can even make it more, but technically that's not a right setup, John. That's a lucky setup. That's a lucky setup. Don't hit your right shoulder with congratulations. In that cases, uh, RSI below 20 by itself means simply nothing. One time it can go with you, the other time you can wake up and regret big time. So don't rely on such things as a rule of a thumb. Okay? Let's continue to commodities, guys. Gold remained bullish for us. Our next level would be 1370, 1380. We don't have any reasons to stop. Silver remains bullish for us. We were looking for 1770, 1780. We got it. Next levels could be even higher. But I want to pay your attention for something here, guys. We have the slowdown forming. We have a few warning signs. First of all, cycles on lower time frames, followed by divergence. And that's 4-hour chart and 1-hour chart. On the 1-hour chart as well, this is a separate cycle by itself. We have a false break here. We might have another false break here. If we start to create few false breaks and lower lows, it would be time to say no to the buys on the short term. As long as we didn't have it, our buy plan was and remains on. Okay? But if we start to have it, guys, it's time to admit that something fishy is happening. We better step back. As long as it's not there, we're good to go for both. Oil. That's what we call oil. We got a breakout of the trend line we wanted, which means our buy plan was and remains on. No changes. Bullish it was, bullish it remains. S&P and Nasdaq and Dow Jones currently, for me, not tradable. I don't see too many reasons to trade it at this stage. So it's for now simply avoiding it. But we have our, what is that? UK sell top of the range. Again, we got here previous week, we got here again so far this week. So far, so good. We have our DAX in a sell, right? We also have this range, so every rally for us is a sell opportunity, and we have the CAC from France bearish as well. No changes currently. Our invalidation would be, of course, break of trend line and higher highs for each of them. Now, NFP week is over. We are back to our stocks. A week before, not previous week because of the non-farm payrolls, a week before, we had our few stocks we wanted to trade. AXA, which did exactly what we wanted to see. That was here. 2 waves up, bearish hidden divergence, and a continuation. Currently, guys, this is a triple cycle down forming, right? So that would be a pretty good idea for those of you who are trading the stocks, of course. It would be a good idea to cash out partials of the profits and let the longer term ones do run. And the long term is here, 32. Okay, that's for AXA we had on our list. We have the BNP Paribas for a sell, same story, double cycle of weekly. We are going down. Our first target, 50% of the short-term cycle here is in play. That's our target. We want to take our first profits from. Okay, you remember that, guys. We followed that from 2 weeks ago, and we still have that. We had L'Oreal Paris, same story, 2 waves up. We are looking for sales. We are in sales as long as these high hold. Bearish plan remains on. And we have our, where is that? Oh, we have the Siemens here, which also paid us very nicely previous week. So 2 weeks ago, sorry. And now we are back down from here. Triple cycle, bullish warning signs, and time to step back. So we are on neutral. So those of you who were shorting here, it's time to step back. Where is that? The next one. Oh, Deutsche Bank. Deutsche Bank becomes the biggest potential now. And this is what I want you to pay attention to, guys. We are here next to the duplication level. Okay, we have this, triple down, correction. It's coming to a monster zone. From this area, we will be looking for buys, and our buys would be activating the trend line. So we need a trend line, the last trend line that will be available for us, and we will need to see a break, higher highs, pullback, and a rally. So stay tuned. We don't short here. We are only after buys once our levels are come in play. No new stocks on the list as for now. Few are forming things. We don't have anything more than that at this stage. That's more than enough. So basically, as for stocks and CFDs, Siemens, NBNP, NAXA, job done. L'Oreal Paris, we have the setup, we have the highs to hold for the short, and Deutsche Bank, we are after the bullish setup and the rallies to begin. Okay, any questions, guys? Thank you very much, Roshin. Any questions, guys, about anything we spoke about today? I hope the cycles continue to get clearer and clearer for you. Those who did not watch the webinars of the cycles yet, please do so. Go to the media zone, write down cycles, and you will see 3 parts waiting for you there. Part 1, part 2, part 3. Okay, complete that on your free time. Watch it a few times if you need. Everything would become clearer and clearer for you, especially for the live room, so you understand the whole picture every time, and you know how you do invalidations and validations setups. Thank you very much for being here, guys. I'll see you tomorrow, and I wish you a wonderful day and happy trading.